Yeah, it's super interesting. There's a huge need for, lower cost, I think, investments within, and more liquid within the commercial real estate and alternative. It seems, frequently I've seen headlines about property owners turning buildings, turning the keys over to the bank on buildings. I saw this week 2 buildings in downtown Denver, big sky rises sold for just $3 million. I think they were purchased for north of $100 million. And the point being that commercial real estate has some headwinds right now. A lot of people have questions about downtown office space in major metropolitan cities. What makes you think that you can get investors excited about investing?
Well, first of all, Sean, we're playing the long game. Commercial real estate's always going to be with us, so that's not going away. We are going through a period, partly COVID, partly higher interest rates higher kind of a sudden move up in interest rates coming out of COVID with the supply chain issues. So there are a lot of things going on in the short term that might make you wonder, but we're playing the long game, and commercial real estate will always be with us. And so what we're doing is building a platform that allows people to increase their asset allocations to a very important part of the alternatives market, commercial real estate. And you see demand out there, even in these volatile times. You see demand from large RIAs, small family offices. Small family offices are used to allocating to real estate. This is just going to be a much more efficient way for them to do that. And the large RIAs are under allocated right now if you look at their allocations, and they know it. So they want to allocate more. The problem is they either have to go into private partnerships, which presents problems for them, or they can go into publicly traded REITs. But if you look at their allocations right now, it's almost all publicly traded REITs. And so they're getting a little bit over allocated. And this, from our interviews with large RIAs, this solution is very attractive to them.
Yeah, I speak with RIAs constantly, and all of them tell me the same thing. They're moving away from just owning traditional stocks and bonds. Their clients are asking them about different investments. When you look at the commercial real estate market, I like to say not all markets are created equal. Is there a certain geography or type of property state that you're trying to focus on?
So there are, but let me tell you why. There's a really good reason for our go-to-market, so say our first 10 deals or so, to be stabilized cash flowing properties. And so where we're looking for those are in the industrial space and the multifamily space, to answer your question. And that's where you get, fully leased, triple net lease on the industrial side. And then on the multifamily side, you'll have, fully leased properties. And releasing in multifamily usually is more of a smooth process. And with some of the industrial properties we're looking at, they're very long with AAA clients, and the reason is this: we want to go to market with deals that valuation doesn't the central issue. So, we want to go to market with deals where valuation calculation, just depending on what market cap rates are, and it's easy to see what the cash flows are going to be over there. Now, Reg A Plus is applicable to just about any situation that requires raising equity capital. You can even raise debt capital, but we're focused on equity raising. And so we do see Reg A Plus being applied to asset purchases, distressed assets, but that's down the road after we've proven a few of these deals.